Hey everyone, and welcome back to the Your Money Life podcast. We're in episode 319 of the pod. So do me a favor, wherever you're listening, you like, subscribe, 5-star rate, and review this podcast. We'll get into it. I'm back from vacation, feeling semi-rested, feeling very rested. And so we'll get into some of the things that need to be discussed this week, as well as touch on anything else that we normally touch on. So let's jump into it. First and foremost, we always kind of start with that market update, trying to give you guys a breath of what's been going on over the past 5 trading days and maybe a little bit further since we were out with specific stuff last week. So let's get into that for us here. So if you look at the today, we always seem to start the morning lower, start the trading day lower, and then kind of claw back to break even a little bit lower. That's what we've done the past several days, it seems like. If you look at a 1 month basis, we're down 3%. There's geopolitical risk. There is a war overseas. There is oil factors. There's different things going on that is causing volatility in the equities market. And as you look at the past 5 trading days, again, we're a little bit down 3/4% pretty much, which again is telling you that the volatility is there. Now, year to date on the S&P 500, roughly, this SPY ETF, we're showing about 2.5% down so far from the beginning of the year. So nothing crazy. Now let's pull the chart out over the past year, 18%, 5 years, still 70%. This used to show closer to 75, 80%, if I'm not mistaken. So again, slight reduction, but if you're thinking about the overall picture for longer term investors, this is kind of really obviously, even not even, you can't even call this correction. A correction is going to be 10% or more. A bear market's going to be 20% or more from highs. And so we're not even in correction territory yet. Now, to be seen if we get there, right? There's still some things going on with geopolitical risk that are going to affect potentially the short term market. And so that's what people want to keep their eyes on. There is definitely things that will potentially affect the short term market, but you potentially see buyers coming in that are taking opportunities to buy stocks and equities and ETFs that have been um, beaten a little bit, and maybe people will pile back in. That's a very, very solid assumption that you'll see, especially as you get into the second half of the year. I think there'll be more volatility through spring, especially when you get to the second, closer to the second, third quarter. You'll see more of that. So we talked about oil on my TikTok, but again, oil is trading higher too. Um, so the West Texas Intermediate futures traded 7% higher at around $94 per barrel. Crude futures advanced 7%, roughly to $99 per barrel after briefly touching 100. So again, oil, the per barrel, these trading securities are going up, right? Because if you think about it, because of the war overseas right now, Iran's supreme leader, the new supreme leader, he said that they're going to keep the Strait of Hormuz closed. And again, that strait is pretty much a place where 20% of the oil has to flow through to get out and out into areas where it's purchased, right? And so that strait where those ships pass with the oil tankers and they're bringing the 20% of the oil through is closed. So if you have a supply issue, then of course the price will go up. If you have a supply issue, of course the price will go up. And so that's something that we can actually look. Do we have the Brent crude oil chart? Let's see. Brent crude is what I want to find for us. Um, let's see if we got a good one here. So again, for those online, we are tracking Brent crude oil. And if you look at the 6 month chart, we were doing $60 for a while, well into the beginning of the year. And then we just had this huge spike. We touched this particular security touched 112, dipped back down, and now we with this new news of the strait being staying closed, jumped back up again. So look at the price of Brent crude. Let's even put it out to a year. We never really touched above $80 per barrel, and now we're really skyrocketing. Again, that's the supply issue when it comes to oil. So again, what does that mean for you? Of course, it's going to potentially trickle down into gas prices, your transportation prices, if you're driving with gas. We like our EV, but if you're driving with gas, it's going to touch into that. And of course, it may touch into other areas. Companies that use transportation, use crude oil for their power, for their gas, are going to have a hit in margins because they're paying way more for transportation. They're paying way more for gas, just like you pay more at the pump. They're paying more at the pump, which then leads to your prices potentially going up as well. So this could cause some interesting ripples through the economy that you'll have to keep your eye on. And then it says here overovernight, three additional foreign vessels were hit in the Persian Gulf, according to authorities. That comes after three separate ships, including one in the Strait, have been struck Wednesday. U.S. forces on Tuesday sunk 16 mine lane Iranian ships near the Strait. This is from an insurance company. So again, this is going to be something that you see, and again, it's more have a ripple effect economically rather than like the volatility in the equities market is is potentially a different issue in that respect. But that is what's going on. This is another story that's kind of popping up, private credit turbulence. So private credit is, if you think about a bank is kind of that institution that that lends, and you can get mortgages. You can potentially, they don't do it as much often, get personal loans or business loans. They don't rarely do that ever. But when banks got kind of restricted because of and not we're not lending for private or businesses because of the credit crisis where they were over lending and overextending, especially for mortgages, private companies popped up that were able to, give folks money or lend money when banks wouldn't, right? And it still had high thresholds for who would get money, but they did come about. But private credit right now is grappling with fund redemptions. People are taking their money out of private credit as questions about underwriting standards and concerns that advances in artificial intelligence could disrupt some borrowers, particular software companies. In the latest development, the Morgan Stanley North Haven Private Income Fund received a redemption request totaling 10.9% of shares outstanding in the first quarter. This is according to a filing. The fund said it will honor 5% of those requests, amounting to about 169 million. So again, private credit's showing some sort of a bubble here, and people are ringing the alarms about that. So we'll have to keep our eyes on that. Jobless claims flat, trade deficit shrinks as housing starts jumps. Okay, so it's positive news on the economic front there. Now let's jump into like some current stuff. We did talk about the oil due to the war, so we talked about Middle East and the largest supply that so this Thursday with the international agency calling the war the largest supply disruption in the history of the global oil market. That's a pretty big statement. So this International Energy Agency is calling it the largest supply of oil in the history of the global market. The price of Brent crude oil, the international market, briefly topped $100 a barrel, as we said. Um, Despite the IAE's decision on Wednesday to release 400 million barrels from strategic reserves. So again, they have these reserves built up, and they control and maneuver the supply and demand as needed. And so that's going to be a big game played for because if you can increase supply a little bit by releasing some reserves, maybe that helps plateau the price. But that's still, again, something to be seen. Now, let's jump right into another news. I was actually curious about this. Apple is coming out with a foldable phone. Did you guys know this? Apple's foldable iPhone to feature iPad-like interface. So Apple has a highly anticipated foldable phone. I think Samsung did one or had one recently. And it will feature an interior display comparable to iPad mini. This is from Bloomberg, and they're citing anonymous sources. The book style device, part of Apple's Ultra product push, will feature a wide aspect ratio and support multitasking, allowing side by side usage. It will also have front facing camera along with two other rear cameras, as well as a Touch ID fingerprint sensor. This tech giant is betting the product's unique design to $2,000 price point will drive sales and rival Samsung's Galaxy series. Okay, so Samsung did have the foldable. So Apple's coming out with foldable. I don't know what you feel about this. In theory, it sounds cool, like okay, a foldable phone, but does it actually? I don't know. Would you actually use it? I'm not sure if I want a foldable phone. I like the phone that I have. I have the what's the newest one? 17? I have the 17. And that seems um palatable for me, right? Like it's a large screen. I like the larger screen. My wife likes the smaller screen. Um, so yeah, that's interesting. I'll have to see what it looks like when it actually does unveil. But again, we've said Apple, oh, Apple does this, Apple does that. Do we actually want it? Um, I love, I end up liking and needing everything that they came out with. I remember when the watch came out, I was like, do I actually need that? Love the watch. I wear it every day now. The AirPods, I've gone away from AirPods, but I do use still. an Apple product, which is the Beats, I need these big Beats headphones, right? Like, so we still say we never use it, but we're going to use it more than likely. And something that we're going to use a lot more of AI because Netflix is just paying up to, they're going to pay up to 1,600 million for Ben Affleck's AI startup. So Ben Affleck has an AI filmmaking startup, Interpositive, and this all cash deal that was disclosed last week would be one of the largest acquisitions to date for Netflix as one of the biggest artificial intelligence deals approved by a major film studio. Disney, a rival of Netflix, has struck a commercial deal with OpenAI, and Amazon MGA Studio has set up an AI in-house unit for television and film production. Interesting. So people are using these tools, and what Ben Affleck's company does is literally just use tools to make, and he's saying that we're going to keep creatives in the process. I don't know how true that is because I don't know, much intricacies about the logistics of the company, but he's saying he wants to keep creatives in the process, but just make them more efficient by giving them the tools to use AI to produce, to create, and to do films much better, much faster, more efficiently. And that makes sense, right? Like on the face to me. Um, but he's a big proponent of AI. If you listen to any of his past several interviews, he's talked about it extensively. Seems to have a fairly good knowledge about how it could be applied to Hollywood and the creative process. And yeah, so they just paid him. They paid him for that movie me and my wife watched. It was good. I think I fell asleep towards the end, but it was decent. And now they just that probably paid him 30, 40 million for that with Matt Damon, and they're going to give him another 600 million for this company he just started not even a year or two ago. So he has a very tight relationship with Netflix and Ted Sarandos and the people over there, it seems like. And that's just a big win for him, I should say. Really, really big win. Let's look more into this. BlackRock commits 100 million to train skilled workers. So big conversation right now is we need the next generation of skilled trade workers. So people are talking about all these infrastructures and data centers and different things we have to build because of AI and the computing power. We need people that can actually build and do this and do those things. There is a net loss of skilled workers in a lot of different categories that people are worried about. The asset management giant's new Future Builders initiative comes as BlackRock ramps up its push into private infrastructure investing and amid climbing government deficits. While artificial intelligence is projected to displace the white collar workers, BlackRock's research has warned that demand for skilled tradespeople like plumbers and electricians is on track to outpace the pipeline of new workers entering the field. Interesting. So the demand for these workers, electricians, plumbing, is on track to outpace the pipeline of new workers into the field. What about like the computers and the AI bots that they said that would just do a lot of that stuff? Is that too far away? We need these people now? It seems like it, but that's what they're planning to do. So we'll see if it actually sticks at all. That's a good point and question. Yeah, that's the big news this week. Again, we were out last week and we got a kind of a good webinar for you guys to kind of just digest and go over. But there wasn't anything too crazy this week. Hopefully, you got a good understanding of kind of what's going on and the basis of what's going on. But let's jump into question of the week. There was actually some really, really good questions, so I want you guys to see this one. The first one being, what percentage of Americans use buy now, pay later in last year? I think we've gotten this one before, and I think I was a little bit too high, so I'm going to go lower. The percentage of Americans that use buy now, pay later in the past year, where in the past year, it's 2025, 2026. I think 2025 was okay for people, roughly speaking. So I would say 20 to 30%. Answer is 15. Note of people aged 18 to 29, so that rough was that on the cusp of Gen Z millennial, they that jumps to 19%. So interesting, interesting. Um, and the percentage of, I'm trying to read this chart, is that the percentage that paid late as well? I'm trying to, interesting. So these numbers come from the Federal Reserve. They said 15% of people use BNPL in the past 12 months, up from 14% in 2023. So we're going up. That's a trend, and 10% in 2021. Okay, we're really going up. The top two reasons for using BNPL were waiting to spread out payments. That's what 87% people said. And waiting to spread out payments and convenience. That's what 82% of people said. That's interesting. So they want to spread out payments and convenience. They make it really convenient, apparently. I like that question. Let's go into another one. What is the number one spending category across all generations? That's so interesting. So you think of boomer, millennial, Gen X, Gen Z, beta. Beta's too young to even, yeah. What is the number one? I actually don't know this. Nothing's popping up. I guess if you had to bucket, is it housing? Is it like food? I'll say housing and food if they allow those. Oh, housing. That makes sense. Across all Americans, housing costs average 33% of total spend. The value ranges from 31 to 41% for different generations. Interesting. Let's see. Do they break out which generation? Next is transportation is the second most highest, then food. So I had our two guesses in the top three. So that's interesting, folks. That's really, really interesting. Folks, make sure you tap into the socials, Delano Sport on across all platforms. We're continuing to bring daily videos where I talk about different financial subjects. It doesn't matter which. Make sure you reach out and let your family and friends know about this podcast because we do this every week and we'll talk next week.